Hey, my name is James Nicholson and welcome to my YouTube channel. Now in this video, I've got some bad news about interest rates. We're going to go more detailed into where interest rates are now expected to go by the end of 2023. Not just 2023 will be fine, right? Where interest rates are going to go by the end of 2023. What that means for us as property investors, what should we be doing right now? And a lot more besides. Now, before we jump into that, make sure you subscribe to the channel over there. Smash that subscribe button, guys, if you're not already subscribed. Hit the bell notification. Also, hit the like button, guys. That really, really helps me with the YouTube algorithm, so I'd really appreciate that. So, obviously, you guys know inflation has been a topic of discussion for months now, more than a year. And it's really, really been very, very stubborn in the UK. America, the inflation is at around 5%. EU, the inflation is around 5%. Where England has struggled to get it down below 8%. We're above 8% still. Now, we had a big drop off. We're expected to get some more, but the government's really going to struggle to hit their target, which is to get inflation below 5% by the end of the year. Now, we're not expected to go into a recession. That's one positive thing. But Jeremy Hunt said today, have to say that very slowly to make sure you get that right. If you've seen the newsreaders that don't, comment below. But yeah, Jeremy Hunt basically is saying that he's prepared and happy for the UK to go into a recession if that beats this stubborn inflation. Now, what do I think about this? Well, I think that it's not great that how the Bank of England have dealt with this. They took too long to raise interest rates initially. I probably think that we probably have the interest rates where they need to be right now because it takes so long for this all to play out. It takes 6 months to 9 months for the interest rates to have impact anyway. So by then, inflation could be well under control with what rates we have right now. So maybe they should wait and see, but it's not looking like it. So the markets are pricing in that they now feel that the interest rate, base rate, will go up to 5.5%, which is another percent higher. Now that's really going to hit homeowners. And I'll tell you who it's also going to hit. Some of you commenting on, here's a guy called Mark that comments and interacts with our channel quite frequently. Mark was very clear and said, look, what's going to happen is I'm going to have to pass this increasing cost to myself as a landlord onto my tenant. And that's a discussion that I've actually had with an estate agent today about, I don't want to, but some of my properties, I will need to raise rates at the rent as well. And so what's going to happen is more landlords are going to leave the market. That's not great. Some of you think that's positive. It's not. It's really, really not. Then there's going to be less rental properties. The rental properties out there are going to have rent increases. The landlords are going to have more costs, so that's going to put the rents up. And I think the rental market's really going to struggle. Someone else that comments on here, Ensol, was saying, eventually you get to a point where the tenant just can't pay the rent. Well, I'm not sure this time. And the reason for that on this one is because there is such a lack of rental stock. I think there will be people that could afford it, but I think the people that are really going to suffer are going to be at the bottom end of the market. There are going to be people that just can't afford rent, and that isn't right. And so the government need to do something to sort this out. Other countries, they didn't have the energy increases that we had, and that's been a real driver in inflation in the UK. The energy companies have been allowed to take the mick with their profits. We could have easily had windfall taxes on that could have been passed on to subsidise and help people. Yes, it's not great when governments interfere in business, but this is a different kind of time, right? This is a different kind of time. And so if those energy companies are taking the mick, then they need to be held accountable for that. So interest rates, I think, will go up 0.25% at the next meeting. I think that's pretty much nailed on conclusion. And I think we'll just see a staggered rise in interest rates. The only thing that will stop this is if inflation suddenly hits 5%. I think if we can get to 5% on that inflation, that's the government target, and they will slow things down and see how things go. If we start seeing 8.1% inflation next month, 7.9 the next month, 7.6, and it goes down like that, that's when you're going to get problems. Now, let's talk about mortgages, because that's important. Now, with the last interest rate rise, what was interesting was even people on a variable rate, some of the lenders, if you watch my video on that, some lenders, although they could, didn't pass that on to people that were just on standard variable rate, which was very, very interesting. They do that because they want to obviously be competitive and get clients. They don't want to lose mortgage clients in this market because there are not many transactions happening in the property market at the moment. So mortgage companies will have less fees coming in. Yes, fees are high, but the mortgage volume, the transaction volume is about 20% down. And so that's not a good thing. And so I think we'll go up 0.25%. I don't think you'll see much of that. I think you'll see a smidge of that passed on to variable rates and fixed rate terms in the mortgage market. Mortgages are calculated on something called the swap rate anyway, but this does have an impact. Of course, this will have an impact on it, but I don't think that you're going to see mortgage rates shooting up like they did when Liz Truss was in charge, above 6.5% for now. It could get there by the end of the year. So what would I do if I was looking to remortgage? Because there's a lot of comments about that at the moment. Well, I think that this whole mess is going to be over in 2 years for sure, but you've got to do what's right for you. But what I will be doing with some of my refinances that are coming up this year, I've got a few at Christmas, is I will be taking those deals on a 2-year basis. So I'm going to see what is the best deal in the market for 2 years. I'm going to get that deal, and then when the market recovers, I will either cash it in and redeem early. If suddenly interest rates get slashed, I'll pay the penalties if I need to, if it works out. Otherwise, I'm only tied in for 2 years. I'm not at this stage going to be looking for 5-year fixed, because I have a bit more tolerance for risk. If you like certainty though, because some people, they just like certainty. They want to know this is what I'm going to be paying month in, month out for a prolonged period of time. Then maybe you fix for 5 years. Maybe you fix for 5 years. And one last option, which some people are doing as well, is going on the standard variable rate. That's a little bit more pricey, but you might get a good deal on there. There are some good deals on the standard variable rate. You can get a variable rate mortgage with no tie-ins. I'm probably not going to do that. I know a few people did that earlier in the summer. Sorry, not the summer. Earlier at Christmas and stuff like that. There were people looking at that as an option, going on the variable rate. That is a consideration, and you can have a look. Look, we didn't think interest rates 2 months ago. The Bank of England was saying the rates aren't going to go up again. Now they went up again because inflation didn't get beaten. Now the market's pricing in that they're going to go to 5.5%. Who knows where we go from there? You could go on standard variable rate though and look at a deal that doesn't have any tie-in clauses or anything like that. You can get low fees with those kind of deals as well. And then if the market and the mortgages do come cheaper in 2024, it's going to be now, then you can move on to those deals quicker as and when they come back on the market. But let me know what you think. Where do you think interest rates are actually going to end up? Be realistic. I know it feels like inflation's not going anywhere. It is definitely stubborn, but where do you think we're actually going to end up with the base rate? Comment below, keep it nice and kind. And I just want to address some of the comments, because some people are saying, hey look, one day you say house prices are going to go up, one day you say house prices are going to go down. That's because I'm sharing with you data from various sources. I'm always quite clear on that. I talk about Rightmove the other day. Rightmove is saying asking prices went up. We'll be talking about Nationwide. We'll be talking about Halifax data as they come up. That's their data that we're sharing. I hope that clears things up a little bit. And so I don't know where house prices are going to go. I don't know where interest rates are going to go. But the market is saying 5.5% is going to be the base rate by the end of 2023. Anyway, do check out all the other content. We sadly had to delay the launch of the Property Accelerator just by a few days. We're launching it June the 1st. So in the description is going to be a link. You can join the VIP list. There's lots of you in that already, which is great to see. So we're launching that June 1st. Do check out that link. Check out all the other content on the channel, including this video right here.